All right, guys, how's everyone doing? Good morning. Welcome to Stocks and Coffee. I haven't done one of these for about a month now, but we're going to get them about 3 weeks in a row. And I might be doing a webinar during the week as well. So keep on the lookout for that. And of course, usually these are Saturday morning. I had to do it Sunday morning this week, but let's get our shout outs in. Let's see who's in here. Post in the chat your name, where you're from, and if you're drinking coffee or anything, what you're drinking this morning. John, what's going on? Danny, how's it going? Brent, what's going on? Uh, Kaylin, how are you doing? Tim, what's going on? Same old dark roast. I think I've got your drink memorized, Tim, from Chicago. We've got Will from Jacksonville. What's going on, Will? Hobbs, what's going on? Just chatted with Hobbs the other day in NYC. We've got Jason in here. John, what's going on? Clayton, what's going on? Scott, how are you doing in Sacramento? Ethan from New Jersey. Brent's got his folders from Alabama. Simon from Sweden. We've got uh, Richard here from New Jersey as well. Kaylin, what's going on from Chicago? Richard's from Chicago. Chicago's well represented this morning. We got our first international uh, person here. That's John from St. Luis Potosi, Mexico. I've never heard of that spot. But all right, guys. So lots to talk about today. We're going to go over the market. We're going to do a revisiting of some of the industries that are important right now, and then some stocks that are in play during the week. Those of you, I recognize some members of the swing service here. A lot of you guys are very familiar with some of these setups that we are watching. So we're just going to lay this out today, kind of game planning the week. And then in our next session, which will either be during the week or we'll do our normal Saturday stocks and coffee, I'm going to start going over some swing setups. The following week, I'm going to talk more about options related to those swing setups. Actually, going to do an options class in September. We will talk. We won't talk about that much today, but in the next few stocks and coffees, we will talk about that options class and even go over some option strategy. And those of you who are swing service know we've talked about some option strategies related to what we do with swing. So that kind of lays out the next 3 weeks. But let's start this week with getting a good feel for what's going on in the market right now. And let's go ahead and pull up SPY, the S&P 500. Most of you guys know when we talk about the market, essentially we're talking about the group of stocks that make up the S&P 500, the NASDAQ, which is the Qs, those are 100 stocks, and then IWM, which is the Russell 2000, and that's more small cap and mid caps. That's not the entire market, but that gives us a good feel for what is going on in the overall market. So let's start with SPY here, which is what we usually start with. And we can see here, first of all, we can see this, what I call here the tariff low. This was essentially the big tariff meltdown when everyone was worried about tariffs. And more specifically, what the market really cares about is what the Fed is going to do, not necessarily the tariffs themselves. By the way, I'm seeing here that my audio is on. I don't know why I have this little. You guys can hear me okay, right? Hearing me and seeing my screen. Okay, good. All right. So this was a tariff low, and you can see ever since then we've essentially been in an uptrend. But like every uptrend that we're in, nothing ever goes up in a straight line. If we pull this thing out since the 2022 bottom, we see a lot of deep pullbacks within that uptrend. And in our post tariff low uptrend, we've seen some dips here as well. And some of these seem really slight compared to some of the dips we've experienced throughout the last couple of years. But when you're in them, they don't feel as slight as they look when we kind of zoom out and are not in them anymore. And that's kind of what happened last week, where we had been on a nice run. Even though we were at all-time highs, there was reasons for caution, and we talked about it too. That we expected some consolidation or pullback, and that was because even though the indexes were putting in these kind of charts with, S&P 500 at highs, we within this what looks like a very tight range, we were seeing a lot of volatility. Especially what we really pay attention to is the momentum stocks. the kind of the really not necessarily the big techs, but the stocks that are maybe mid cap, even some of the lower floats that are momentum type plays. And you can see my list of the Focus 40 here, all of these types of stocks here. And what we were seeing is it was a very mixed bag. Some were continuing to run, some were pulling back. And on top of that, we were seeing volatility within that, a lot of deep pullbacks that weren't necessarily playing out when we look at the indexes. So that was our clue to be cautious, and we took a cautious approach, even though we were seeing plenty of setups at stocks setting up. We weren't necessarily adding up, and that was in good measure because the market did pull back. We can attribute it to a lot of different things. As technical analysts, we don't really care about the news. We just know what we're seeing under the hood and in the indexes, and we knew to be cautious. But we also knew what the news event that was coming up, and that was the market was essentially waiting for the Fed minutes and also Powell to speak at Jackson Hole. And every year when he speaks at Jackson Hole conference where all these guys meet, that becomes a very important talking point, and he kind of lays out what he's thinking, sometimes a little differently than what he said in the Fed meetings. So that was important for us, and you can see how the market reacted on Friday, which is a little bit of surprise because he usually doesn't cause this kind of price action, but that's great for us, obviously. So the Fed minutes came out, and the Fed minutes were actually a little concerning. That's why we saw a continuation of the pullback here. In the Fed minutes, basically what the Fed minutes is doing is releasing what the guys talked about, or what the Fed heads talked about behind closed doors leading into the previous meeting. So we got that release, and it was kind of a mixed bag of what all these guys were saying. And with the next Fed meetings expectation that rates are going to be cut, that caused a little bit of concern when you saw what was actually talked about in the Fed meeting. It was a little, we could say, hawkish. But then on Friday, Powell came out, and the market loved what he said. You can see here, Powell clearly opens the door to rate cuts. Here's a quote from here: "The baseline outlook and the shifting balance of risks may warrant adjusting our policy stature." Basically, what he's saying there is rate cuts are in play. Not necessarily that for sure they're going to do it, but the market liked that line right there. So the market's already been pricing in, and I don't know how they come up with this number, but they've been saying now it was 80%. Going into the meeting, they were saying 70% chance that rates are going to be cut. And this Powell speech basically confirmed what the market has been thinking. That's essentially why the market has been on this run, even though there have been some concerning things related to inflation, related to the economy, related to tariffs and all that. Uh, because even though there's all that, there's an expectation that we're going to get those rate cuts finally. And that's why we saw the price action on Friday. Now, whenever there are one of these types of talks or anything related to the Fed, usually get this kind of initial reaction. And we know what was said. We know the market likes that. We know it's what the market wants to hear. But sometimes it takes a few days for the actual trend to shake out. If I were to guess, I would say in the coming week or two, we are going to see strength here. But there might be a little bit of back and forth. So even though we had this candle on Friday, we did add a position. We didn't go nuts. Part of that is also that we have some positions in play already. But so that's one thing to remember when these types of reactions to commentary happen. One, there can be more commentary over the coming week. And what often happens is Powell speaks, and then a lot of the Fed heads start speaking, the other people who make up the Fed. Powell obviously is the most important, being the chair. But these other guys will start saying stuff, and that can move the market a little bit as well. So we take a little bit of a cautious approach. I would say bullish, but slightly cautious. So we put on positions, but we don't want to go nuts with our risk. So that's where we are right now in terms of the overall market, essentially liking what we're seeing, and we're seeing confirmation of a trend continuation. So we like that, obviously, here. So that's what we're seeing in SPY and what has happened really, last week related to what Powell said. If we look at the Qs, which is going to be focused more on tech and big tech, you can see also we had a deeper pullback than we did with SPY, and then a bounce off the 50-day moving average. So we like that as well. Lagging a little bit, and that SPY's at highs in right at the, you pull up SPY here, you can kind of see the difference here right at the high, where Qs are still, and that's part of that is because of the deeper pullback. And then what's really important to us is what IWM is doing, because reflects more of the type of stocks we like to trade. And look at how strong IWM is, breaking not the all-time high, but breaking this range right in here, which is very good. And you can see IWM was up almost 4%, while SPY was up 1.5%. So we really like that. It's interesting if you look at the media, if you look at CNBC and some other spots, this actually concerns some of those guys because they'll say, well, it's just a speculation that's moving, and the stronger stocks are not moving as much. But we actually like that. So for us as traders, we like that kind of action. And still, even if we look at big tech here, the big guys, they were moving as well. Most of these guys were up green on the day and up more than 2%. So I think overall, we had a very strong, healthy market. And then if we look at some of our market breadth indicators like RSP. So we know SPY is 500 biggest and best companies, but not equally weighted. Top 10 holdings make up about 30% of SPY. Apple and Tesla alone make up 5 or 6% of SPY. So we look at RSP, which equally weights all of these stocks here. Apple and ENPH and CE and BLDR are worth the same 0.2% to make up this. And we want to see under the hood how strong this is. And notice here, very strong. So RSP was confirming what we were seeing in the Qs, QQEW, very similar ETF in that it's equally weighted. And we saw some strength here as well. Not quite as strong, but everything's confirming that we like what we're seeing in the market. Now, what do we want to do is just make sure Monday and Tuesday we're seeing confirmation of what we saw on Friday. If we see that, we'll look to add even more positions. And of course, we have a lot of stocks that we like right now. And we'll go over those in a second here. But so that, we had the Powell meeting. We have essentially the trend continuation breakout. Now we just want to see, are we actually seeing continuation? So we want confirmation of that. We know what's going on with market breadth. We're seeing confirmation of what we see in the indexes as well. And then we're paying attention to industries that are really sensitive to rate cuts. And you're going to notice when we look at our stocks to watch here, I have a much bigger list, about 40 or 50 stocks, but just for us today, some that are really setting up for us this week that if you just have this list right here, you'll have some good stocks to potentially trade during the week. Notice here, we've got Toll Brothers, BZH, JCI, Lowe's, Home Depot, and I could have added a bunch more. These are all related to housing in one fashion or another. And we are seeing a big move in housing right now, because if you think of what is one of the industries most sensitive to rate cuts, it would be housing. So obviously, we're seeing a big move. If we look at some of the housing ETFs, we can look at ITB. Look at that, up 5%. So SPY was up, and we're looking for relative strength there. SPY was up 1.5%. ITB here was up 5.26%. So we're seeing a strong move, and we've been talking about this for a while. We essentially called the bottom here. We were seeing a change in this trend, and we saw this bottom formation forming. Look at all this good volume coming in here. Just look at the difference here in what we were seeing here. Even when it was in an uptrend, we were seeing a little bit of distribution, which kind of predicted here the move down. But now we are seeing a lot of strength. This tells us the big guys are building positions here. When we see this kind of move and a break of the downtrend on this kind of positive volume. So obviously, home builders are in play, maybe a little bit extended now. So we'll keep this on watch. But we are looking for setups in this industry. And we've got 4 or 5 stocks we're watching right here. Another thing you can do, and we are in this, that's NAIL, which is the leveraged ETF. So for a lot of these industries, you have the leveraged ETF. So the underlying would be ITB, and also we could look at XHB as well, which was also up 5%. And then we can look at NAIL here. NAIL gives us triple leverage. So notice here, those things were up. Actually, is it triple leverage? Yeah. Okay, here, 15%. Yeah. So those were up around 5%. Notice here, NAIL is up 15%. So for us swing traders, that's great, right? We get that added volatility. It can be a double-edged sword. Remember that it's volatility to the upside, but it can also go down that much, triple the leverage as well. So if ITB were to pull back 2 or 3%, then NAIL would be down, 7 to 10%. So we want to pay attention to that and know when you use something like this, you have to use some pretty loose stops because there is a lot of volatility on these leveraged ETFs. But an easy way to play the industry would be just to use NAIL or play some of the stocks in this industry as well, and we'll talk about those in a second. So, um, housing, a very important industry right now. Anytime you start to see rate cuts, this is an industry that's going to be in play. Another industry that will definitely be in play is retail. And notice how strong XRT, a retail ETF, is. Now, within retail is a pretty big, broad industry. So within XRT, you're going to see a lot of different kind of stocks. You're going to see apparel stores, footwear, but also things like auto parts and cars and a lot of different kind of retail areas. It's a very big industry. Two of the industries we're really paying attention to right now, which kind of go together, would be apparel and the stores that sell apparel. Those stocks have been on our momentum list, and I think I've got one stock in here for us related to that. That would be Melly, and maybe another one in here as well. Carvana, obviously, retail for cars as well. So retail and RL, Ralph Lauren, also. So we have a number of retail stocks we're paying attention to because retail very sensitive to interest rates when there's rate cuts. Also, obviously, better for the consumer, and then the consumer is going to buy more stuff. So anything consumer discretionary comes into play when we get the rate cuts. So those are two areas we're watching very closely. And then some of the areas that have just been in play, we're watching big tech always. Quantum computing, AI, energy, or energy related to these two industries have been in play for a while now. And in this area, what we've been seeing is big runs and then deep pullbacks. And it feels like we're getting ready for the next run in this area. And then kind of a dead industry that we haven't paid attention to for quite some time now. Solars have put in bottom formations, and more importantly, off those bottom formations, we're starting to see continuation now. And we have stocks from all of these areas in our watch list right here. I actually didn't put in the solars. Let me add in FSLR and CSIQ. So let's just quickly take a look at these industries. Big tech, we'll just look at all the stocks here. We're actually in Tesla right now. You can see here, Tesla has a really important range here that is formed. And within that range, as it's been consolidating, it's been putting in higher lows. So each of these pullbacks has been a lighter pullback than the previous pullback. And it had a very strong move on Friday related to the Powell news, up 6%, almost 20 points here. You can see up to 340 and tested the indexes, or sorry, not the indexes, the moving averages as well. And we are actually in this one and are targeting the top of the range. We would take profits there. And then if it broke through this range, we would get back in. But that's a very strong resistance level. So it's a good spot if you're in it to take profits short term and then see if we get a break of that level. So Tesla, really nice chart pattern here. Google has been strong after lagging the other big techs because some worries about antitrust issues and some other issues as well. Now has been very strong and is actually testing all-time highs. For a trade for us, maybe Google's a little extended right now. I like Amazon a lot here because it has pulled back some. And we can see here, we've got room to hit the all-time high. The all-time high on Amazon is 242, 243. We had the trend continuation pullback and another pullback here related to earnings. Notice the big gap down. One of our favorite setups related to earnings is the gap down reversals in strong stocks. And we got that here. I know it sounds counterintuitive. It has bad news related to earnings, but you'll find a lot of these earnings gap downs are overreaction, especially in good stocks, and that they reverse very quickly. And that's exactly what Amazon has done here. Notice here, this is an important level. This is where Amazon gapped down from. And notice this bounce here stalled exactly at that gap fill. This is very common. Then you'll see some consolidation and then finally a break of that range. And when it breaks that range, it'll go on a very strong run. And that's what we're watching for right now. So there's two triggers you could use. One is wait for this thing to get up to about 234. If it breaks that level, you can play it and then target maybe the all-time high. Or because we expect that to happen anyway, and it's already kind of had this test of this range, on the strength here, we could enter here and anticipate the breakout. So enter here and hold on. You might have to hold through a little bit of consolidation, but it obviously gets you in at a better price and you get better risk reward that way if you're targeting that same spot. So two ways to play that. Kind of the safer way is to wait or enter here and anticipate. So I like Amazon a lot. Meta has been very strong. Notice here, Meta broke the all-time high, pulled back, tested the 50-day moving average and the all-time high, and is showing strength at that level. So it's essentially triggering a test of the old all-time high. So I think this thing could be entered Monday or Tuesday as a very nice setup. We have Apple here. Apple has been lagging the other guys, but has shown strength recently. And what I was going to do was watch for the pullback to the 200-day moving average, but I don't know if that's going to happen. It might find strength here at the 90 MA, but definitely on watch. Microsoft, same thing, has pulled back deeper than the other guys, even though it had one of the best earnings reactions of the big techs. And now we'll watch for the bounce at the 50-day moving average. Maybe if you can remount the 90 MA. And again, if you're a little more aggressive, you can just enter here and get that better risk reward. And then we're in Netflix as well. Netflix has been kind of a relative strength leader. Surprisingly, it didn't participate in the move on Friday on no real news at all. It wasn't like there was bad news for Netflix, so I'm not really sure why it didn't participate. But still, overall pattern is strong. We had the deep pullback. If I was looking to enter, I would wait for a remount of the 50-day moving average and then target. You can see I have a target range here listed at the old high here. So I think almost all of the big techs are kind of in play for potential entries. My two favorite right now are Amazon and Meta for entries this coming week. Now, quantum AI and energy, we'll just look at a few of these stocks. Let's start with the energy plays. Now, when we think of quantum and AI, a lot of people will tend to look at the pure kind of quantum plays or AI plays. For quantum related, we have IONQ, QTBS, and a few others. But sometimes it's the indirect plays that work the best. So, for example, way back when in the 1800s, when railroads were essentially tech stocks, even though the railroad companies did very well, it was the materials companies that built the railroads that outperformed railroads themselves. Back in the internet boom, the pure internet plays were great, but it was the semiconductor plays, the things that were essentially laying the tracks for the internet were the even better plays. And we're seeing some of that again with quantum, that the quantum plays are great, but the stocks that are really outperforming are the things that provide the backbone to it. So, for example, the nuclear energy plays. So there's Oklo, there's VST, there's CEG, and a bunch of them. DUK, a bunch of them. And Oklo is one of our favorites. So we're watching Oklo very closely. We'll just pull up IONQ, and we'll get to now some of the stocks that we are watching. And let's go ahead and start with those plays. Here's IONQ. Now notice here, and you see what we were talking about, where these plays can make very strong runs, but they also have some of the deepest pullbacks as well. You can see here, this made a huge run from 7 all the way to 50. But then the pullback was from 50 all the way to 18. So more than a 50% decline. And now it's very quickly right back up to those old highs. Notice here, it pretty much tested the old high, has consolidated. And now we have a very good kind of pullback, kind of value spot to enter here. And the move on Friday was very well. I've been waiting for a remount in the 50-day moving average, but I think it could even be entered here. And then if you target the top of the range at 50, you're looking at maybe 10 or 11 points. If you place your stop maybe at about 3 points, you're looking at 3 to 1. So really good in terms of risk reward. And we are in Oklo right now. And again, this is the energy play, and this illustrates what I was talking about. So IONQ is more of the pure play. Oklo, which is nuclear energy, is outperforming. And you can see where IONQ was. It's obviously about 10% here below its all-time high, whereas Oklo is essentially right at here's the old high, and you can see where it is just a little above the recent high that it made. So you can see the comparison in relative strength. So Oklo here, a very nice pullback setup, tested the 50-day moving average, and went on Friday when it was remounting the 9 AMA. That was the cue for our entry. So IONQ, Oklo. Let's look at some. I don't know if I need to go over all of these, but you guys have the list here. Let's go over some of the home builders. So that'd be Toll, BZH for pure home builder plays. And then again, some of the things that provide the backbone. So JCI would be the engineering and construction. Lowe's and Home Depot obviously do very well when people are buying homes because they need to fill up their homes and do house projects and stuff. So Lowe's and Home Depot will do very well as well. So let's take a look at these charts. You can see here Toll. We recently traded this into profits, and now we're waiting for our next entry in Toll. Really big move on Friday, maybe a little extended, but we'll essentially be watching for pullbacks in a lot of these housing plays. So there's Toll, there's BZH here, almost a similar pattern here. BZH would probably be a little cleaner entry right now in that it's just remounted the 200-day moving average, and we could play it on a little bit of a pullback. JCI for engineering and construction, even better setup here. And notice here, again, the indirect plays often outperform. So we see with JCI, it's outperforming the home builders where it's already way up near these highs here and is testing the 50-day moving average. And then both Home Depot and Lowe's recently had earnings and strong earnings reactions and are doing good post earnings reactions as well. So these stocks are on watch. They all need some pullbacks. And when you're waiting for a pullback, obviously there's some risk that the thing could run, but we don't want to chase these things. So we'll look for our optimal entries in these five stocks. We went over Oklo already. Let's look at Melly for retail. Let's actually do all the retails that we have here. Melly, Carvana, and RL. Let's start with Melly here. Melly's another one that when it runs, it really runs. And when it pulls back, it can pull back deep. And notice here we have the kind of trend pullback and now rebounding the 50-day moving average. So I think it's a good spot to potentially enter here. We have RL. And notice here, RL is testing its old high. And we always like that. When we get the break of the high, the pullback, and then the retest of the old high is a very strong setup, assuming you see strength at that retest. If it continues down, it's essentially a failure. But when we see strength there, that's a very good signal. So we have RL, we have Melly, and Carvana. You can see here earnings breakout pullback within a bigger, strong uptrend. And it's actually triggering a textbook kind of breakout pullback, earnings breakout pullback here at the 50-day moving average. Let's look at Coinbase and we'll look at LABU as well. LABU is one of those leveraged ETFs. We're actually in it. Biotech has been strong. And you can see here, we had the higher lows, and we played it when it retested and broke the old high here. And we're playing this for a little bit of a longer term swing because there's strong potential for a very big trend in play. So I like LABU and biotech in general. And when we trade biotech, I generally trade rather than stocks because they're so sensitive to their own news. The leveraged ETF LABU, which is a very volatile ETF, and then Coinbase, which is obviously a volatile stock here as well. What I really like about Coinbase is it's essentially completing a big IPO cycle, and that is when a stock IPOs, oftentimes a year or two after the IPO, it gets crushed. We'll put it in a bottom formation, trends to the old IPO high. We'll often test it, and then when it breaks the IPO high, it will go on a huge run. And that's what we're waiting for in Coinbase. You can see it's essentially been consolidating ever since it tested that IPO high, has pulled back here. We can play this now. I think it's a very strong pullback setup to test the high. So we could enter here. We could play it to the old high at 434, which is almost 100, almost 100 points here. No, actually over 100 points. So it doesn't look like a lot, but it is. We're at 319 right now. 434 is the high. And then if it breaks that high, we could potentially see 50 or 100% type move that we could continually trade or just hold if you're willing to hold for a little bit of a longer term. So really like the overall pattern, IPO pattern in Coinbase. All right, guys, that's what actually I wanted to go over solars. Let's look at FSLR and CSIQ. If we look at FSLR, solars have been waking up on some news here. You can see FSLR had been pulling back, had been in a pretty strong trend, had pulled back really deep, and now has remounted the moving averages. And key, the 50 has crossed over the 200-day moving average, and price action has been strong. We had a pretty deep pullback, but Friday held the 9 EMA. I think that would be a decent entry where it is right now. And then CSIQ, this one was high on our watch list. We really like the pattern, essentially breaking this big downtrend when it broke the 200-day moving average, retested and showed strength, but now gap down on earnings. So we're going to have to wait a little bit, see if it comes back over the 50-day moving average. But if it does, I like CSIQ a lot. FSLR is the easier play, But if this guy comes back up over the 50-day moving average, I think this has potential to run more than FSLR because when these bottom formations or when these downtrends break, oftentimes they're very and they break and they're broken on news. Oftentimes there's very big runs. So we'll watch this really closely. All right, that's what I wanted to go over today, guys. Again, we're going to have three of these coffee and stocks, essentially 3 weeks in a row, and I'm going to fit in a webinar in between during the week as well. And then we're going to have a options class related to swing, specifically to swing, coming up in September. I'll talk more about it later, but just keep that in mind. And we'll have some discounts and some good deals on that as well, and also the swing service. But if you guys have any questions or tickers you want me to go over, we can go over them right now. Sal had a question. You don't use the 20-day moving average. Yeah, I like to have a short term, intermediate term, and long term. If you have too many, you get a lot of mixed signals. So I use 50 for my intermediate, 200 for my long term, and then 90 MA for my short term. If you find, and I used to have the 20-day moving average on, so there's nothing wrong with it. But I feel like these three are good enough for me. But if you like the 20-day moving average and it works for you, go ahead and use that. Daljit saying thoughts on NVIDIA. I like NVIDIA, but NVIDIA for now is on the do not trade list just because earnings are coming up this week. So we can't really enter before earnings. You know, it's essentially gambling. It could go up or down. We don't know. But I notice here it's been very strong and kind of rolling over here. So what I would be watching for NVIDIA, one is it has high earnings expectations. So it's going to be very hard for it to beat its expectations. That being said, semiconductors in general have been strong recently. So I would watch for NVIDIA's reaction to earnings. And I would actually, again, this sounds kind of counterintuitive, but I would like to see it gap down. I think if it gaps down, it'll be an overreaction to those high expectations for earnings. And at some point, we'll see a reversal, and that would give us a very good spot to enter. So keep that in mind. Don't get scared if it gaps down. Keep watching for those kind of earnings gap down reversal setups that we trade. All right, Danny's asking about TLT. I don't trade TLT very much just because it's not the most volatile for us, at least recently. In terms of a setup, there's nothing here screaming at us. The only thing I would say is you have good risk rewards. So if you want to get in here and think there might be a pop, you could trade it, but it's not something that I generally trade. John's asking about SBET. That's not something on my radar. Let's take a look here. All right. It's in the gambling space. Actually looks very similar to SCIQ, where a big downtrend has broke the downtrend. I'm assuming there's some kind of news related to this. I don't know. I haven't been paying attention to it. But I do think it's a decent setup where it is right now. At least you're getting good risk reward. You could enter here, place your stop at about maybe 1650. And even if you target up here, wow, 38, you're getting really good risk reward. So in that sense, really good. Ricky's asking about GDX. Gold miners, really strong here. Gold miners have been in a very strong trend. The only thing I would say is it's a little extended here. Maybe see if it pulls back to 58, kind of test this range before entering. And as you guys can see, I don't like entering when something's extended. And I would rather say miss out than get in kind of a tough spot. Brent's asking about PLTR. I do like PLTR. It's high on our watch list. I don't think I had it listed here, but I do like it. I want to see it had a very deep pullback, testing the 50-day moving average. If you just enter here and know that there's a good chance you could get stopped out, but if you risk 6 points to potentially gain 30, that's very good risk reward, and you only need to win on that maybe 30% of the time to be really profitable. But I would probably want to see a little more strength. If it remounts a 90 MA, that's a good signal that the trend is back, and you could enter at that spot as well. All right, Kunal here. I didn't realize Kunal's in here. Kunal, we talked about FSLR. I know Kunal loves the solars. He was the first one to mention it in the swing chat. So we talked about FSLR. Also said G. And we can see here, this one has shown a lot of relative strength. Very similar to CSIQ in that it broke the downtrend, broke the 200-day moving average, has been showing strength. And unlike CSIQ, we don't see the big gap down. So a little more relative strength. I really like this one. maybe a little bit extended. If we could get an inside day Monday or Tuesday, maybe an entry here around 31 or 32, I think that would be a really good entry. BSA is asking about BMNR. Breakout pullback, I like where it is right now. Kind of a textbook breakout pullback. All right, we'll do a few more of these and I got to get out of here. All right, Uber and UNH. Let's start with UNH. United Healthcare, I would probably have United Healthcare as a stay away from right now. That being said, whenever I say some of these things are really beaten down and kind of a stay away because we don't have a good pattern to trade it, you are getting good risk reward. And if you targeted here all the way up to the moving average, say 427, and you get in at 300 and only risk like 10 or 20 points to potentially gain over 100, you're getting such good risk reward that even if you don't have a pattern, it still can be a decent setup. And then Uber, I like Uber a lot. That's high on our watch list as well. You can see here, been watching this for a while. This is the box breakout setup. It broke the box, pulled back, and retested. Remember, I've been talking about these retests of highs. We traded this one when it retested the box here, and we got out here, and now it's retesting essentially where we had got out. So watch this level very closely. If it breaks this range, I think it's really set up to run. And the way we play the kind of longer term trend play on these box breakouts is we measure the box, and that's what the potential for the next move is. So you can see here, the box range was 55 to about 83. So that's essentially around 30 points. So now from 82, our expectation is this could be running to about, say, 110 or 120, and it's at 96 right now. So still a lot of room for a trend play on Uber. All right, guys. Really great session here. I know there were more questions here, but I gotta run. Let me actually go over a few more. Uh, Dennis is asking about FNGU. FNGU is a big tech ETF. And notice here, it's been strong, up about 4% on Friday. It has leverage. And the question is FNGU versus the Qs. And the Qs is obviously the FNGU stocks are in it, but it has more stocks and non-tech stocks as well. Costco's in it. Some of the big box retail stores are in it as well. If you're hot on big tech, specifically, you can go with FNGU, and I do like the overall pattern. So even though big tech lagged a little bit on Friday, I like the patterns a lot. So I think FNGU is a very good play. All right, guys, great session as always. Really good commentary from you guys. We're going to do another one of these next week, and keep on the lookout. I'm going to do a few of these during the week as well. So, and then those of you guys who are swing members, I will see you guys tomorrow. Enjoy the rest of your weekend. All right, guys, talk soon.